you see opportunities in all of this choppiness.
Yeah, you always got to buy what others are selling and sell what others are buying. And right now, there is a lot of pessimism about the economy. So the stocks that are cheap are stocks that are sensitive to global growth and the economic activity around the world. So what's not cheap are the companies that aren't sensitive. Consumer staples, utilities. Coke and Pepsi are trading at 20 times earnings. But Borg-Warner, which is economically sensitive, is trading at about 9 times earnings. So we think that's where value is.
What about stocks that are sensitive to these trade concerns? At what point do you look at those, or do you figure that they've gotten so cheap that the risk had been perhaps overestimated?
That's a good question, because frankly, there had been general consensus in the market that we were going to get a trade deal. The market, I always like to say, is sort of an old-fashioned Republican, not a current Republican. It's a Reagan-Bush Republican. It likes low taxes, low regulation, and free trade. And the market thought we were going to get a trade deal with China because it was in both countries' best interest. China needs a trade deal with its biggest customers, and we frankly don't need a downturn in the economy that would come from a trade war. So the market thinks we're going to get a deal. If that thought unravels, it's going to be a little bit unpleasant in the short term.
We've had some money managers in the past week or so, Charlie, suggest that you actually sell on a trade deal, that there's this giant sell on the news building up, even if it's, especially if it's more of a purchase and promise type deal, not the structural revamping that we're looking for out of China. What do you think of that?
I might have said that 3 months ago when everyone was sure we were going to get a deal. But lately, we've seen those bad headlines yesterday, and I don't think it's completely in the stock market today that we're going to get a deal. So I bet if we get a deal, we're going to get a nice day when that happens. And then I think, frankly, trade is just good. It's good, Carl. And I think that economists agree on that. It's good for profits. You talk to almost any CEO. Good trade relations are good for profits, and I think that will show up with numbers in the future.
What if we just had Eamon Javers on suggesting that maybe this March 1 deadline gets pushed out, and the market realizes that this is going to be an overhang for longer than we thought? In which direction does that move the needle?
I think what they will probably do if that happens is say that we've got significant progress and show us some of the significant progress, and then say, but we're just not ready on the finishing touches. I think, frankly, the market's not going to be that concerned on the details here. They want something structural that helps with the fact that China has been a punitive trade partner. China has engaged in all kinds of practices. You talk to any CEO of any international company, they will tell you there are things the Chinese have been doing that are just unfair. And I think if we get progress on that front, and I think we are, then even a delay in this, so long as it's not indefinite, will be viewed very positively.